Bonds. Guys, I am just checking out the bonds, guys. I got the bond, the Deutsch, the German 10-year. I got the UK 10-year, the gilt. What kind of code name is that? Got the 2-year T-note. I got the 5-year T-note. I got the 10-year T-note, and I got the 30-year T-bond. And they've actually moved in the past months very strongly. So let's recap where they are, what's happening with them, breaking down or breaking out. Here's my monthly defined support for the Deutsch, the 10-year Bund. That's so funny. All right. Monthly defined, recently monthly defined, breakout level, closed above it. What's those dates? This is December. So in January, exploded. Another level right here, another resistance level, broke out in January above it. And right now, February, closing above another level. Just going right through these monthly defined levels. And that's a chart morphing, giving you bigger and bigger patterns. So let's see where we close February. After that, you're just going to have one more very close to the all-time. Let me check this out right here. Oh, here's my target, monthly defined target. So if we have a monthly close above 166, I have my target. It's going to bring me all the way to 172, 173 almost. So that's been going in uptrend. So what does that mean for the 10-year? Interest rates going down, right? If the bond value is going up, the yield should be going down. So there seems to be some pricing of interest rates going back down, guys, for the 10-year. Okay, let's go for the UK. The UK 10-year, the gilt, same thing. Monthly defined support. Oh man, I keep double clicking. I just want to see a bigger picture. Okay, it was an uptrend going down, shaky stage 2, stage 3, small stage 4, but right now back into a stage 3 and even starting angling upwards into a stage 2. Right now, I'm going to zoom in. Whoa, right there. This one also breaking up above monthly defined resistance. So both going through critical levels for the 10-year German bond, the UK 10-year bond. After that, where's my target for this one? Zoop. Oh, target, please. And the monthly, what's good about the monthly chart, use it. You have a new chart under your hand. Instead of going the daily, the weekly, following the news, crazy new product, or even for the bonds, the bonds going back up, going down, and then you lose track, and then you think there's correlations with something else. Take a step back, just pop up the chart, use the closes of the green candle, the closes of the red candle. That's where the market decided that the monthly defined support or resistance, they didn't want to go below it. All those wicks, that's the noise. But right now we're above. So if it could still close below. February is not done yet. If it closes below, then we're going to continue ranging here, but still above an inclining 12-month moving average. So the pressure is going to be up and up. And when you get a close above that monthly defined resistance, then you got to target all the way up here, 127. You're going to get some, you're going to run to some resistance right here. And then after that, some more here. A lot of not often hit resistance once, twice at different levels. But expect that if ever it busts out, it could hit that, go back down, test that breakout level, go back up here, classic, and then this type of move, guys, with the 12-month moving average going upwards. 2-year, a little 2-year. Look at that. That's a crazy, crazy looking chart. I do not understand that one. It's like, no, you can't go higher than that. We refuse, no matter what. Defies anything, defies gravity, or gravity pulling it back down. And then this has been down, 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 down. And you finally, after a couple of years, the last time we were above it, we had a close above it. Was all the way back in July of 2016, and now we're finally above it. Still declining, so you need a lot more price action above for the 12-month moving average to go back up. But you're still above the 12-month moving average, so you can't be shorting the 2-year bond anymore. Monthly defined, check right there. And where are here's some levels here that we went above. See, I'm looking for those green closes, guys. And here's the next level. After that, there's no green closes. So this could be on the monthly defined chart. On the monthly chart, this is a vacuum. This could be skyrocket all the way back up here, if ever it busts out of here. So let's see if it goes back down here. It might have to work a little bit. And then after that, I see it clear coast all the way back to these levels right here. So again, the interest rates for that period, so the 2-year yield is inverse to the value. So if the value goes up, the yields go down. Somebody's pricing in an interest rate drop really, really soon. And that's how I see it, man. So it's right above. We gotta wait. This could go crash back down. Right now it's above. You can't short it. Just like the 10-year bund above, inclining, stage 2. UK, same thing, hasn't had enough momentum, and the 2 years just gonna need a little bit more of a candle since it was so steep, the decline, before it bounces back up. And here's the critical level. If it closes above what's the close here? Close goes 106.25. This could skyrocket back up. 5-year. Ooh. Up. Sideways, down, down, and up. So now we got to close above. Here, barely closed above. The next month went back down, resumed the downtrend on the monthly chart. This one kind of looks like the 2-year. Here's monthly defined breakdown line. Oh. Ooh, is it inclining? 12-month moving average is inclining. Wow. Okay. So price action above, 12-month moving average inclining. Ran through these levels here. Whoa. Right here. And now we closed above in December, January. Now we're above February. It was before, but now during the month, it's going back up. So these are my levels. Then we have a vacuum all the way up here to what I call a wall. So that's previous support, now turn resistance. And then a little higher up, I have natural resistance. So this is how I imagine it could happen. Let's see where it closes here. And if that becomes important, resistance not going to be important support, then we could be going up. Maybe not get too greedy, hit that one here. Whoa. Until that's enough, and then it starts slowing down. It's stage 2 ascent, and then goes back down. So the 5-year aligned, all the bonds are aligned. They're breaking out, starting to turn around from that bottom on the monthly chart. If I zoomed in on the weekly, the stage 2 breakout probably even more severe, really starting. Because remember, for the 12-month to start turning, you need the weekly to start turning up. And for the weekly starting up, you need the daily. So when you see on the monthly already that you have a break, that you have a declining or inclining 12-month moving average, it's already on the way on the smaller time frames. So we've been in stage 4 for a while. Whoa, tried to get out, wasn't quite ready. Down, and now inclining 12-month moving average. Looks like the 5-year. Here's my monthly defined Here was a breakout line right here. Another one here. Close above in December. January up. February a little down, but trying to go back up. And here's the next level to look at. Right here. And that's it, guys. Woo! Down, up here, down, and up until it slows down. So the 10-year also pricing in yield reduction. Increased bond prices equals yield reductions. And the 30-year, man, that long-term beast. Look at that thing. Beautiful stage 2 for a while. Drop. It's been dropping since 2016. And the price seems to go up. Want to go up, guys. Look, inclining 12-month moving average. Above horizontal breakout line. Right here. And here's the next. Oh. So it's not quite ready to break out like the other ones. It broke out here, embryonic. But right now it's hitting some important resistance. See that wick? Wasn't quite ready to get out of there in January. And right now we're going to wait for February, see if it closes above. And I expect the same type of action. If it does, close above, test that. And after you go, here's where I expect some resistance right there, guys. So it's kind of fun seeing the 30, the 10-year, the 5, the 2, how they morph, how they look alike, but just different. Same, but different. The 2-year, and then we got that 10-year UK. See, it hasn't been going as down as the American bonds. Staying pretty much top formation, not much selling to those bonds. And the Deutsche bond, never going to a stage 4 or barely stage 3, and then trying to break out, going up. So bonds, guys, up. That's I guess that's a good safe haven if ever the stocks go down. It's getting priced in that they're starting to bottom technically. So don't be surprised if these things skyrocket upwards, guys. All right. Thanks for watching. And don't forget to subscribe, guys. Appreciate it. Ciao.